Welcome back to Investing Talk Podcast.
Today, we are stripping the paint off Ondas Holdings. And listen, if you've been following the defense or, the autonomous sectors, you've probably seen the ticker. But today isn't about the stock price, at least not right this second. It's about a company that is sitting right at that chaotic, lucrative intersection of autonomous systems and modern warfare. They just dropped an update that honestly forces you to look past the ticker and stare directly at the engine under the hood.
Okay, but usually when we talk about massive updates, we're talking about, the trillion-dollar club, the big tech giants.
Yeah.
Are you arguing that this small cap player has just fundamentally altered its entire trajectory?
I am, and I don't say that lightly. We are looking at a revenue beat, a backlog that has nearly tripled in just a matter of months,
Right.
and a cash pile that creates a fortress where there used to be, well, a tent. It's the kind of recalibration that changes the whole thesis from can they survive to who can actually stop them.
As usual, before we start, subscribe, like, and comment to this video to support the show. We do read the comments. We really appreciate the engagement, so just hit that button. Now, you seem pretty revved up on this guidance update. Set the stage for us. What actually happened here?
It's more than just a beat. It's a signal flare. You know how we always talk about companies promising that hockey stick growth?
The hockey stick, yeah, it's always 2 years away.
It's always next year will be the year.
Correct.
Exactly. Well, Ondas is transitioning toward commercial dominance in what we call the lower skies economy. That's everything from autonomous defense drones to ground robotics. And the guidance they just put out suggests the hockey stick isn't coming next year. It's starting, like, right now.
Okay, I've seen the headline numbers, and I admit they look big on paper, but I have to play the skeptic here right away. Ondas has been expensive. They have been historically dilutive. I mean, painfully so for early holders. And the stock chart hasn't exactly been a straight lineup. Is this real organic growth, or is this just some financial engineering to make the quarter look pretty?
Let's unpack the fundamentals, because that is where the answer is. You want to talk about real growth. Let's look at the preliminary full-year 2025 revenue. They came in between $47.6 and $49.6 million.
Which, to be fair, is a decent range, but, decent doesn't usually justify the kind of volatility we see in this sector.
It's more than decent when you realize that exceeded their prior targets by 23%. But if you stop there, you miss the real story. The story is the momentum. Look at the fourth quarter of 2025 alone. Just Q4, they pulled in between 27 and 29 million. That is a 51% beat above their prior Q4 target.
Wait, hold on. So nearly half of their entire year's performance was compressed into the final 3 months.
Exactly. That is acceleration. That's that backloaded performance that isn't about accounting tricks. It's about delivery. It means the flywheel is actually spinning.
That is a significant ramp. I have to ask, though, what's driving that specifically? Is this just one lucky contract landing in December? Did they just get a big check from a single donor? Or is their actual product moving out the door?
It's the demand for the platforms themselves. We aren't talking about consulting fees here. We are seeing accelerating demand for their autonomous drone platforms, specifically Optimus and Scout systems and the Iron Drone Raider. Plus, you have the contribution from their acquisitions finally kicking in, specifically RoboTeam. So no, not one lucky check. It's the product lines firing in unison.
Okay, so 2025 ended with a bang, but the market is a forward-looking machine. We don't buy stocks for what they did last Christmas. What are they telling us about 2026?
This is the headline grabber. The 2026 revenue target has now been raised to a range of $170 to $180 million.
Whoa, back up. The previous guidance was what, 140 million?
Correct. They raised the floor by $30 million. That is a massive jump in confidence. When a management team raises guidance by that magnitude this early in the year, it usually means the ink is already dry on the contracts. They aren't hoping for work, they're scheduling it.
That's aggressive, and honestly, it's necessary given the valuation. But let's look at the balance sheet. Because growth is expensive, and in the defense sector, cash is oxygen. I'm looking at the pro forma cash balance here, and it's startling. Over $1.5 billion as of December 31st, 2025.
It's a fortress balance sheet.
Yeah.
For a company this size, that is an absurd amount of liquidity.
It is, but we have to address the elephant in the room. That cash pile didn't magically appear from sales profits. It follows a huge $1 billion offering. For existing shareholders, that is a double-edged sword. Yes, you have security, but you also have massive dilution. They essentially printed shares to build that war chest. If I held this stock 2 years ago, my slice of the pie just got micro-sized.
You aren't wrong. The dilution stings. There's no sugarcoating that. But you have to ask, what does that cash buy them? In this specific industry autonomous defense, it buys them a runway that their competitors can only dream of. Most drone startups are living hand-to-mouth, constantly raising funds just to keep the lights on. Ondas now has the capital to weather any storm. And more importantly, look at the backlog. You can't fake a backlog. It's sitting at $65.3 million, up 180% just since November 2025.
180% in what, roughly 3 months? That implies a frantic pace of orders.
Yes, that's the validation. The cash from the offering isn't being used to pay dividends or buy back stock to juice the price. They're allocating that capital into reinvestment. They're pouring it into AI-powered platforms, ground robotics, and securing these multi-year defense contracts. They're buying market share while everyone else is trying to survive.
So the argument is that the cash pile basically de-risks the execution. They have the money to actually build what they sold.
Precisely. And that leads to the competitive moat. This is the part that I think most retail investors miss. Ondas isn't just selling a drone. If you just sell a flying camera, you're a commodity. You're competing with generic manufacturers, and you will lose on price. Ondas is executing a system of systems strategy.
System of systems. Okay, that sounds like corporate buzzword bingo. What does that actually mean in practice?
It means integration. Think about the modern battlefield or a complex industrial site like, say, an oil rig. You don't just need a drone in the air. You need a grand robot to open a door. You need a counter-drone system to protect your airspace. Ondas is merging 5 different technology stacks into one single offering.
Walk us through those stacks.
Okay, so first you have the aerial drones tech from American Robotics and Aerobotics. These are not hobby drones. These are drone-in-a-box solutions. They live in a docking station, charge themselves, fly the mission, and come back. Zero human involvement.
Right, truly autonomous, not some guy with a controller standing in a field.
Exactly. Second, you have the ground robots from RoboTeam and Apero Motion. Think robot dogs or tracked rovers that can go into tunnels or climb stairs. Third, you have the counter-UAS tech from Centrix. This is crucial identifying and neutralizing hostile drones. And finally, you tie it all together with their own private wireless networks, the FullMax platform.
Okay, let's pause on FullMax for a second. Why does a drone company need its own wireless network? Why not just use 5G or Wi-Fi?
Because if you're NATO or a utility company managing a power grid, you cannot rely on public infrastructure. You can't have your drone lose connection because the cell tower is overloaded or because someone jammed the Wi-Fi. FullMax is based on the IP 802.166 standard. It's a mission-critical private network. It gives them authority over their own spectrum. It offers longer range, higher security than Wi-Fi. It's the nervous system that lets the aerial drone talk to the robot dog.
So if I'm a client, I'm not just buying a robot dog or a drone, I'm buying the network that makes them all talk to each other.
Correct. And that creates stickiness. If you're a major rail operator, once you install this proprietary interoperable system, the towers, the docking stations, the command software, the switching costs are incredibly high. You can't just swap out an Ondas drone for a generic off-the-shelf competitor because that generic drone won't talk to the rest of the system. It protects them from that race-to-the-bottom pricing we see in consumer electronics.
It's the Apple ecosystem play, but for autonomous defense.
Yeah.
Once you're in the walled garden, it's hard to climb out. I get the logic. It's smart strategy. But let's pivot to the charts to see how the market's reacting to all of this, because fundamentals are great, but price pays. What are you seeing?
Well, looking at the technicals, the price action is validating your enthusiasm, at least recently. We are seeing some genuine breakout momentum. The shares have been rising, hitting higher highs. And interestingly, this seems specifically driven by news of European deployments. The market loves a global story.
Yeah, it confirms the technology works in the field, not just in a lab somewhere in Massachusetts.
Exactly. And looking at the levels, it appears that some significant psychological resistance levels have been breached. When you break through those ceilings, it often invites more buyers to the party momentum traders who don't care about the tech, they just care about the trend.
But are the big players showing up? Or is this just retail excitement fueled by internet threads?
That's the key question. And looking at the flow, we are seeing whale activity.
I always love to see the whales.
There are distinct signals of institutional flow. High session volume stepping in to buy the dip. And this is important because remember, the stock had previously slipped about 22% in a month. Usually when a stock drops that much, investors run for the hills. Here we saw big money stepping in to catch the falling knife.
Which suggests they view the drop as a discount, not a warning sign.
Right. I interpret this as volatility-fueled accumulation. The smart money is positioning itself ahead of that 2026 inflection you mentioned.
Yeah.
They're looking at that $170 million revenue target and thinking the current price is a bargain relative to that future cash flow.
That aligns with the news cycle we've been tracking. And moving on to what the street is saying, the narrative has shifted pretty significantly in just the last few weeks. It feels like the media is finally waking up to what they're building.
It's because the wins are getting harder to ignore. You can promise technology, but you have to sign contracts. Just look at February. On February 13th, we got confirmation of a new multi-million Iron Drone Raider order from a NATO country.
NATO is the gold standard of validation. You don't sell to NATO unless your stuff works under pressure and meets incredibly strict standards.
It is. Then, just a few days prior, on February 9th, they secured a $30 million multi-year demining program in Israel via 4M Defense.
That's a humanitarian application, but also a very tactical one. I mean, demining is incredibly dangerous work for humans.
Exactly. It shows versatility. It's not just kill chains, it's saving lives. And the coverage has shifted. On February 11th, we saw analysis referring to Ondas as the industrial bridge to autonomous dominance. That is a powerful label. It positions them not as a niche player, but as infrastructure.
And the analysts, are they buying the hype or are they staying cautious?
They're raising the targets. We've seen price targets upgraded to $25 for 2026. The consensus is starting to form that Ondas is the leader in this lower skies economy. The skepticism about their tech stack, can they really integrate all this? That's evaporating as the orders come in.
So if we look at the overall sentiment score, I have to concede it is skewing bullish. Even though my quantitative models are showing some neutral scores, likely due to the historical volatility, the sheer weight of these order wins is overpowering the skepticism about profitability.
It really feels like a turning point.
But we have to look at the risks. I am the designated skeptic, and I cannot let you off the hook that easily. We painted a rosy picture, but let's look at the dark side.
Fair enough. Hit me with the bear case.
Okay, the first one is execution risk. You talked about the system of systems and merging 5 different tech stacks: aerial, ground, wireless, counter-UAS. You make it sound like Lego blocks, but in reality, merging corporate tech stacks is a nightmare.
It's complex, absolutely.
It's a logistical nightmare. Merging one company is hard. Merging the tech stacks of American Robotics, Roboteam, Centrix, and making it all run on a proprietary wireless network. If any link in that chain breaks, the system fails. If the robot dog can't talk to the drone because of a software patch in the wireless protocol, the client demands a refund. Can they actually make all these acquisitions work together smoothly, or do we end up with a Frankenstein monster of tech that doesn't quite fit?
That is the engineering challenge, and it's a valid concern. Integration debt is a real thing. If they spend all their cash just trying to glue these systems together, they might miss the market window.
And then there's the financial reality. We talked about the cash, but we have to talk about the cost of that cash. The $1 billion raise caused significant dilution. If you were holding this stock a year ago, your ownership percentage has been decimated.
True. You paid a heavy price for that safety net.
And despite the revenue beats, the headlines still read expensive, dilutive, unprofitable. They are not profitable yet. They are burning cash to grow. We're in a high interest rate environment. If the market turns risk off, or if a geopolitical cooling happens and defense spending drops, unprofitable growth stocks get punished the hardest.
They do. And you can't ignore the macro environment. If defense budgets get cut, Ondas feels the pinch.
And finally, volatility. You mentioned the recent rise, but let's not forget the 22% monthly slip that happened right before it. This is not a blue-chip dividend stock. This is a volatile defense sector play. If you buy this, you have to be ready for your portfolio to swing wildly. You could wake up down 15% because a contract got delayed.
You have to have a stomach for it, no doubt. But honestly, that volatility is the price of admission for this kind of upside.
Yeah.
You don't get 10x potential with a savings account.
So how do we score this? We've looked at the massive revenue beat, the fortress balance sheet, the system of systems moat, but also the painful dilution and the massive execution risks. What's your final verdict?
I've been weighing the risks heavily, and the integration risk that keeps me up at night. But the change in guidance is just too significant to ignore. I'm awarding Ondas a bullish score of 8 out of 10.
8 out of 10. That is high praise considering the dilution. Walk us through the thesis.
It comes down to the transition. Ondas is successfully crossing the chasm from R&D to commercial dominance. This is the hardest phase for any tech company moving from cool prototype to shipping product. When you guide for $170 to $180 million in 2026, you aren't guessing anymore. You are delivering.
The visibility is there.
The visibility is there. The wins in Israel and with NATO validate the technology in the most demanding environments on Earth. If the Israeli Defense Forces trust your demining robots, that is a seal of approval that civil engineering firms will respect. And regarding your risk points, yes, the dilution hurts, but that $1.5 billion cash pile de-risks the execution. It allows them to scale massively, to hire the best engineers, to build inventory while their competitors are starving for capital. In a capital-intensive industry, the company with the biggest bank account usually wins.
So this is a winner-take-most scenario.
I believe so. My target horizon here is a multi-year hold. You hold this into the 2026 revenue inflection, you don't trade the weekly swings, you wait for that guidance to turn into earnings.
It's a compelling argument. The cash buys them time, and the contracts prove the product works. If they can knit those 5 tech stacks together seamlessly, they become the operating system for modern autonomous defense.
Exactly. And that is a very valuable place to be. Think of them as the Microsoft Windows for robots in the field.
Yeah.
Everyone else just makes the hardware. Ondas makes the ecosystem that runs it.
That's the verdict on Ondas, a high-risk, high-reward play that seems to be turning the corner on execution. Don't forget to subscribe, like, and comment to this video to support the show. We'll see you in the next one.